this is all coordinated, all done to try to kill this industry. But it was the fact that the people who tried the hardest to get regulated and to get in compliance with whatever the SEC wanted the rules to be, no one knows what those are. The fact that those are the ones who got sued, that was a shoot the stallion to scatter the herd strategy. And it was designed to scare everybody else away.
Today's episode is brought to you by Akash Network, the world's premier decentralized compute marketplace. Check out Akash to buy and sell computing resources securely and efficiently. Purpose-built for public utility at akash.network. Welcome in, everybody, to another episode of Coinage, as we are still reeling from the fireworks that came from the first time we've seen all 5 SEC commissioners together in 5 years' time. A lot of people slamming Gary Gensler, and for those of you who have been frustrated with the way the SEC's run crypto regulations here in the U.S., it was perhaps cathartic to watch it all play out, but that's not the only word to describe it. Excited to be reacting to everything in the crypto space, re-regulations, with one of our favorite guests here at Coinage, the founder of Custodia Bank, Caitlin Long, joining me once again. Caitlin, great to see you again.
Zach, great to be back. And this was fun. When you reached out to me and said, hey, let's talk about this, I was like, well, I didn't watch the whole thing, but I certainly have seen the clips. And there were fireworks. It was fun.
There were fireworks, and honestly, we couldn't have lined this up better because, you know, we always love having you on, and it just so happened that this hearing was kind of also scheduled around the same time, and obviously it's not the only thing going on in crypto, but it is kind of where the collective thought is right now. And I just kind of want to start with the clips that you've seen in terms of kind of what crypto Twitter was sharing. What did you make of it? What's kind of the word you'd use to describe kind of everyone ganging up or reacting to the way that Gary Gensler has really not done a great job? Well,
it was hypocrisy. Fireworks, of course, in terms of the show quality of it. Grab the popcorn. It was a good show, but the substantive word I would use to describe is hypocrisy, because everybody not everybody, but both political parties, some folks on the Democratic side, also went after Gary Gensler for the hypocrisy.
Yeah, and I surprising because we pulled some clips from all this. We're going to start with maybe the star of the show, as it always tends to be, Representative Tom Emmer, the majority whip, by the way, basically laying into Gary Gensler. He's delivered some of the greatest hits, but I just want to play a little bit of what we heard from him because I think he summed it up pretty well. We'll play Tom Emmer's clip and get your reaction on the other side. Take a listen.
You made the broad proclamation that you believe a majority of tokens are crypto asset securities. You did this, and you would deliberately use this made-up term as the basis for your entire enforcement crusade over the past 3 years, only for your lawyers to retract it in a footnote to a court just last week. Your inconsistencies on this issue, sir, have set this country back. We could not have had a more historically destructive or lawless chairman of the SEC.
Destructive and lawless is how Tom Emmer described Gary Gensler's reign at the SEC. And I think maybe, to use your word, hypocrisy kind of very much at the forefront of how he's run the agency. I mean, what do you make of what we heard from him?
Well, look at the record. Let's assume that he doesn't stick around in a Harris term or that Trump fires him, as Trump said he will do. What did Gary Gensler achieve during his time? From his perspective, he thinks he had a great reign at the SEC because he's trying to clear the runway for a central bank digital currency, which the real boss, Elizabeth Warren, told Chuck Todd on Meet the Press she wants a couple years ago. So she's on the record on that. And so he looks at it as we were just throwing sand in the wheels of all of these upstarts and trying to slow them down because he wants, first of all, the big banks, which is one of the major pieces of hypocrisy we'll come and talk about in a moment with this Bank of New York Mellon news, but really more so the Fed itself to issue a central bank digital currency. And he's locked arms with all the Warren appointees in the federal financial agencies who are trying to do the same, trying to set it up so that the U.S. has a central bank digital currency. Okay, so that was his goal. If you think about his reign at the SEC from that perspective, he probably gives himself an A. But the rest of us look at it and say, he's had the agency's wings clipped in court. He's had the administrative procedures overturned by the Supreme Court, saying that people don't have to stay in these. You basically can't be judge, jury, and executioner inside of a federal agency. It's that people who have who've been grieved by a federal agency have due process rights and can bring those proceedings into the court system, not in front of an administrative law judge. These things are huge in terms of the power of the agency. And then, of course, just the way that the average investor thinks about the SEC, it's pretty clear that it's been used as a cudgel against those who are trying to use this new technology. And they've done a lot right. By the way, you know this. I say this all the time when you ask me about him. They've done a lot right. But man, oh man, have they done a lot wrong. And excuse me. And they've harmed the SEC's reputation with investors. It's supposed to be an investor protection agency, but it's pretty clear that it didn't protect investors from FTX, didn't protect investors from BlockFi and Celsius, and from TrueUSD, which it sent filed an enforcement action against yesterday.
Yep.
Meanwhile, it's suing all the good actors who have done everything they can just to try to comply, but there's nothing that they can comply with. So Gensler got the worst of all worlds. A bunch of fraudsters defrauding investors, not sticking to his mission of investor protection. But again, in his mind, he wants a central bank digital currency. So he probably thinks he did an A+ job.
Well, I thought that was the most interesting part for me personally. And you're right. I think that sometimes you can drown out real critiques and real policy criticisms and kind of where things are going wrong from a moral standpoint with the SEC and Gary Gensler. If everyone just kind of shouts, hey, this guy's dumb, like that's, I don't know if it does the space any favors.
He's not dumb.
But I think, it was very interesting to see not just, Hester Peirce, who we've had on Coinage before, up there with him kind of blatantly calling him out, but also commissioners that we haven't necessarily heard too much from before, including Commissioner Uyeda. And you mentioned your resume, Caitlin Long. It's been decades on Wall Street before you started Custodia. Uyeda's been there for almost 2 decades too. And I just want to play this clip too in an exchange where he basically said, to use your grade of Gary Gensler, maybe thinking he gets an A, he said he'd give the commission a D basically under Gary Gensler. And it was kind of an interesting point. So just want to play that back and forth where he had, for lack of a better term, the stones out there to say, look, Gary Gensler has not done a great job and I haven't enjoyed it. Take a listen to what he had to say.
So in your opinion, the SEC under Chair Gensler is no longer the gold standard?
I've served with 6 chairmen. Unfortunately, our condition today in rulemaking, I would say, is below the average.
What struck me when you said these words, and they're bold words, is that you say them right in front of basically your boss sitting 3 or 4 chairs away from you.
I'm not his boss.
Well, the chairman of this committee who is making the rule.
We have lively disagreements on policy, but the comment summaries that Commissioner Uyeda is talking about are actually put out to public, and he also gets those well in advance of a vote.
So there aren't a lot of people who can speak to, I think, why Gary Gensler's SEC has been historically terrible, Caitlin. But I think that if anyone can, it's probably Commissioner Uyeda and you, honestly. I think you've seen this play out. I mean, what is it about it that's been so bad?
Well, there's no rule of law. There's just lawlessness. It's exactly what Commissioner Uyeda said, that the rulemaking is a grade D because they're doing all kinds of things outside of the rules, right? And this SAB 121 thing is, again, the word hypocrisy just keeps coming up. They designed that. They basically overruled the entire accounting profession and US GAAP to say, well, we don't want SEC filers to custody digital assets. So we're going to change an accounting rule of all things to make it impossible for them to do that practically. Not impossible, but make it costly for them to do that. And it was all designed to just, again, throw sand in the wheels of this industry. It's a Bill Ayers rules for radical strategy. They're gonna turn any dial that they can, regardless of the side effects, and to achieve the Ends justify the means. That's what this Warren group is all about. They want to try to kill the private digital asset industry. Okay, so they overrule the Financial Accounting Standards Board for US GAAP, throw into disarray the whole accounting question over digital asset custody. And then they announce in July they're giving special exceptions to the large banks, several large banks, quote unquote. Okay, so how corporatist is this? And Gary Gensler and Elizabeth Warren call themselves progressives, and they have literally done the most corporatist thing that you could possibly do, which is block out all the upstarts, create a rule to try to throw sand in the wheels, and then turn around and say, oh, just kidding, let's give the big banks special exceptions.
Yeah, and it's also the point that Gary Gensler said that he had never heard of the term choke point 2.0 also. That had a lot of people scratching their heads because it seems unlikely that he hasn't heard that term, given all of the kind of workings together we've seen with the rest of the financial regulators. But to your point, I do want to play a clip from Wiley, the congressman who came on with us a month ago to talk about maybe why Kamala Harris, as you said, might not want to pursue the same path that President Biden had and really lean into what Gary Gensler has done at the SEC. And obviously, everyone crossing our fingers that that's true. But Wiley basically asked every commissioner down the line how you square allowing technological progressions with what Custodia wants to do, what we here at Coinage want to do by creating a co-op and DAO that lets our NFT holders steer the show and co-own it with us, but also protect investors. And that's where Gary Gensler, I think, he definitely distinguished himself from everyone else on the commission, but it was kind of a strange back and forth, and Wiley got a little bit of a zinger in there too. So let's take a listen to what the Democrat that's super anti-Gary Gensler had to say.
I'd like to get a yes or no answer from everybody here, starting with Commissioner Crenshaw. Yes or no? Do you agree with Vice President Harris, her statement that the U.S. should encourage innovative technologies like digital assets while protecting investors and consumers? Yes or no?
Yes.
Yes. Yes.
Yes.
Yes.
Protecting the investors, I agree with that for sure. Promoting innovation, yes, but protecting investors.
Yes or no?
Yes, protect the investors. That's what we are doing.
Chair Gensler, I hope you understand that your misguided approach to regulation by enforcement and open hostility to crypto is hurting our economy and sending American jobs overseas. You've single-handedly set us back years in our support for Web3 technology.
Now, to your point, Caitlin, I feel like, it's under the veil of investor protections, but a lot of this is definitely not that. When you talk about choke point 2.0, it is not investor protections. And certainly for you operating here as good actors in the space, they're not making it any easier for people like us.
No, they're actually targeting the good actors. We've talked about this before. In Wyoming, we call that shooting the stallion to scatter the herd, because they're trying to send a message, right? So when the Coinbases of the world get sued, and it's very clear that Coinbase has tried very hard to get registered with the SEC, but the SEC just won't engage with them and then turns around and sue them. I thought it was really interesting because the Robinhood testimony last week, because Dan Gallagher and I worked together on our previous startup Symbiont. We were on the board together, and Dan was a former SEC commissioner, and he's now the chief legal officer of Robinhood. Okay, so this guy knows people. He was there for a long time at the SEC. So just to put it into context, when he testified that they'd had more than a dozen meetings with the SEC and they had drafted no action letters, they had made it easy for the SEC to try to do something to break through. I feel his pain, by the way, because Custodia and the state of Wyoming did the same thing with the Fed, okay? Did everything we could to go up the middle of the fairway and get regulated on the agency's terms. And then the agency turned around and sued Robinhood. It blindsided. Same thing with us, the Fed, blindsided, denial. Okay, so this is all coordinated, all done to try to kill this industry. But it was the fact that the people who tried the hardest to get regulated and to get in compliance with whatever the SEC wanted the rules to be, no one knows what those are. The fact that those are the ones who got sued, that was a shoot the stallion to scatter the herd strategy. And it was designed to scare everybody else away. But stop and think about what the outcome is. when they then roll out the red carpet for their friends, the big banks, while they've stopped everybody else? How can they possibly claim that they're actually progressives?
Yeah, no, it's a really good point. And I think it's also kind of, if anyone ever looks at the facts, and that's rare these days, I suppose, but when anyone does that, you can't really square with the idea of, okay, we really need good actors in crypto. We got to shut down everything in crypto and then turn around. And if you're Elizabeth Warren and say, you know what, we want the big banks to be able to get around all the rules that we just had to block people from banking. It doesn't gel with anything that she claims to be. And
of course not.
But I mean, it would be funny if it weren't so bad for everybody else, is the problem. And that's kind of where it's really flipped on its head. And maybe, and this will be the last clip I think we have to play before you and I just kind of riff on maybe, some of the positives, because I think I like to look at the positives, and the fact that we have more and more Democrats, including Ritchie Torres, who we're about to hear from, kind of laying out where all this hypocrisy gets us in the long run. If you extend it and let Gary Gensler continue doing what he's doing, it ends well for no one except for kind of the big banks and everything else that crypto is here to help with. And I just want to play what we heard from him, because I think he's done a really good job of highlighting where the hypocrisy is for projects like ours, where it's like, okay, you've chosen not to define anything when it comes to where the problem with NFTs are. We've heard from Ritchie Torres before saying, if you have a Pokemon card, why is it a problem if you put it on a blockchain? He continued that line of thought, which I thought was a really good point to say, this is where the SEC is not being honest, moral, or genuine in trying to protect investors. Take a listen to his back and forth with Gary Gensler.
In a September 12th court filing, the SEC had to apologize for using a term it invented out of thin air, digital asset security. The fictional term digital asset security perpetuates the false narrative that digital assets in themselves are securities. In the Howey case, as you know, Mr. Gensler, the Supreme Court never held that orange groves in themselves were securities. The Supreme Court held that orange groves can be part of investment contracts, which are securities. The same logic applies to digital assets. In my view, using the term digital asset securities is as intellectually dishonest as using the term orange grove securities. Mr. Gensler, would you ever use the term orange grove securities?
I don't believe I have.
Or would, right? Because it gives the impression that orange groves in themselves are securities, and that would be misleading.
So he kind of exposed him there. I mean, I don't know. What did you make of that line of thinking from Ritchie Torres?
I love Ritchie Torres, right? And one of the things, I spent a lot of time talking to people in DC. I generally try to stay out of DC, but talk to people in DC to try to figure out what's going on, because so much of the future of Custodia is dependent upon what happens in things in DC. And Ritchie is one of the people that the White House listens to. So some of the folks in the last cycle, some of the Democrats who were outspoken, everyone just assumes, okay, well, they're going to continue to be outspoken. But Ritchie is someone who's very substantive and walks a very substantive line, and he doesn't always vote crypto. And so multiple people have told me he's one of the up and coming Democrats that the White House really listens to. So when he goes down a path like that and just skewers Gensler on intellectual terms, not on just some, political hand-waving terms, the White House takes notice. Okay. So here's the next question. Like, what's going to happen with Gensler? Harris hasn't said anything about it. Clearly there are powerful Democrats who want him gone and who want a house cleaning of this Warren crew. And I pointed this out on Marty Bent's podcast a couple of days ago, which just came out this morning as well, that there's a war in the Democratic Party between the progressives who are pro-CBDC and the pro-business Democrats, the more moderate Democrats. And of course, the Silicon Valley crowd, we saw Nancy Pelosi vote for the overturn of SAB 121. So you started to see the Silicon Valley more pro-business Democrats push back against all this. And I've heard through the grapevine, but I cannot, this is definitely third hand, so I would not put any stock into it. Heard through the grapevine that the Harris campaign has told the bankers that all these financial regulators would go. Okay. And that makes sense to me, because the pro-business wing is pushing back against the progressive wing. They see the progressives being hypocrites and handing the big banks all this advantage. Meanwhile, the Silicon Valley upstarts are getting stymied, and they say this is wrong. So I don't know if there's going to be a house cleaning, and I'm certainly waiting for Harris to say it. I've also been told that she's walking a fine line because she doesn't want Biden to come out and distance himself from her, so she can't really criticize him. So where does that leave us? We have no idea at the moment what Harris would really do. And we're just hoping that there isn't a second Gary Gensler and Michael Barr at the Fed and Marty Gruenberg at the FDIC term. Marty Gruenberg, because of all his Me Too issues, which, by the way, Warren backed him. Where is she defending all the women who were sexually harassed in the FDIC, of which there were hundreds?
Good point.
I mean, that was all over the Wall Street Journal. There was a huge investigation into that, hundreds of complaints. Where is she defending the women? She's leaving Marty Gruenberg in because he wants a central bank digital currency, and he's doing her bidding at the FDIC. And of course, the nominee, Christy Romero, is in limbo right now, and I don't know if there's going to be a change. So it's again, the hypocrisy is the word of the day in this Warren crowd. Man, oh man, do they say things that sound good to the progressives, but look what they're actually doing.
Mm-hmm. Yeah, no, I think it's important to highlight, and you kind of opened all of this with the mention of the BNY Mellon plans to custody crypto, and kind of that was a common thread, was really exposing, to your point, the hypocrisy of SOB 121 and the idea of the SEC allowing kind of backdoor exceptions for big banks now, when a bunch of other startups have been trying to figure out how to do this the right way for a long time. And so it does paint a very strange picture, but I suppose you raise another good point in terms of the war right now for Democrats, because so much, obviously, this is an election year. Coinage isn't necessarily a political show, but here we are in the thrust of it all. Basically, you were down at Bitcoin Nashville and you saw President Trump being there. It almost seems like that's a foregone conclusion in terms of pro-crypto regulation, whatever that means, and no one really has gotten into specifics on the Republican side necessarily either, because it's very deep in the weeds. But it sounds like maybe the war going on inside the Democratic side is really where potentially, this would be a huge swing if you consider how negative the Biden administration has been for crypto. To come anywhere closer to the middle would be a huge win. I feel like maybe that's the big story to watch.
It is. But the Trump story is I'm glad you raised that, because that's a good point, right? He had a very anti-crypto Secretary of Treasury Mnuchin in his first term, very virulently anti-crypto. Okay, and so it's personalities policy. It is going to matter who Trump puts in as Treasury Secretary, because that's going to dominate the decisions. A lot of the policy is made out of the Treasury Department, because that's the IRS, that's the OCC, that's FinCEN, right? So a lot of the agencies that touch crypto regulation are inside the U.S. Treasury. And of course, the U.S. Treasury Secretary serves with the chairman of the Fed and the chairman on the FDIC on multiple boards. Okay, so the FDIC and the Fed and the SEC as well, are all independent agencies outside of Treasury, but Treasury Secretary is the big one. So I don't know if Trump has said he'd love to have Jamie Dimon as Treasury Secretary. What do you think Jamie Dimon would do? Would he help any of the small startups? No, he loves the big banks. So I don't know that Trump's policy is going to be that much better. It very much depends on who, again, he puts into that Treasury Secretary role. And then, of course, Fed, FDIC, and SEC as well. But I would also say that even if there is a pro-crypto 100% turnover in all those political appointees, it's the career staff also been involved in this. I'll point to Nick Carter's list of who got involved, who were the instigators of Operation Choke Point 2.0. A lot of the people on that list were political appointees. They were presidentially confirmed, appointed, and Senate confirmed. Again, all of them have deep Warren ties. We now know that that's the truth. But there was one senior career staffer that was on Nick's cast of instigators, and it's Michael Gibson at the Fed. So those senior career staffers are all also on board with what has happened here. And will the turnover of the political appointees, regardless of who wins the presidency, really change anything? It all depends on how committed to real change those political appointees are, and whether they are truly bestowed with a change mandate. Okay,
Yeah.
and I've had conversations with the likely appointees in these positions in both political parties, interestingly, and they both get it, that they're going to have to go down into the career staffers and make a lot of changes, do a lot of house cleaning. There's some phrase like send them to the basement or something like that. You can't, under civil service union rules, fire people, but you can change their jobs and essentially take them out of their positions of power. And that's how you shake things up. I know that these issues have gone deep down into the agencies, but it's so interesting. I'll point to the Custodia case because our lawsuit filing last week revealed some things about the folks on the ground at the staff at the Fed viewed Custodia positively. But what the Fed then publicly said, which we now know was part of Operation Choke Point, coordinated with the White House, the FDIC, the SEC, the OCC, right? All designed to kill all these crypto banks, right? And they didn't succeed in killing us. I think they underestimated us. But the point is, what they said publicly about Custodia was 180 degrees the opposite of what the Fed staff actually thought. Okay, and so those Fed staff down on the ground, they were clearly overruled and told by people not to be positive about Custodia. And so when there's 100% turnover in the political appointees and the senior staff, my guess is that they will get a voice again and they'll be happy because they probably look, and I'm talking about all the agencies here, not just the Fed and what happened to Custodia. The good folks who are in the agencies doing the actual work are probably appalled at what has happened in terms of the abuse of authority and the extrajudicial things that the federal agencies are doing right now. So coming back to your question, I don't know that Trump's going to be that much better. You've got to actually get down a few layers in order to get real change. Yeah. And if he doesn't do that, then I don't think he's going to be that much better. And even the same is true with Harris. I'm talking to a couple of people who are close to the Harris campaign and sending them the message, you're just going to get undermined. If you really want change, you're just going to get undermined at these agencies unless you do 100% turnover of those senior career staff too.
Yeah, no, I mean, I think it's interesting just kind of given the fact that, Trump's co-chair, I think of the transition teams, Howard Lutnick, Cantor Fitzgerald, I'm sure you cross paths in terms of, Wall Street, in terms of how big of a player they are. But I mean, he's big in the crypto space because they're supposedly custodying Tether's treasury assets, and a lot of them. And I don't know, it seems interesting to think about what this all looks like. And again, I know everyone's anti-CBDC, but what might happen if it's just, okay, let's craft the rules to where Tether's the only player in the game. And then all of a sudden you've got just one company essentially contributing to digital dollars around the world. And I don't know if that's necessarily a positive in the other direction either. So I don't know. There are interesting kind of hypotheticals to play with.
Very good question, Zach. And I really like the other co-chair of Trump's transition team, Tulsi Gabbard, because I do believe that she's committed to free speech. She's committed to decentralization. She's one of us philosophically. There's a real split emerging in the Bitcoin crowd of the sort of pro-Wall Street, raw number go up. We're just here to trade. And this is just another asset class. And then those who are philosophically committed to decentralization. And it's so interesting because when you look at the Trump transition co-chairs, I think there's one of each on the Trump transition co-chairs. It's great that they're both pro-crypto. One is really committed to decentralization. The other is the CEO of a Wall Street firm that's a primary dealer. And, let's look at let's put it this way. Regulation benefits incumbents. And he's an incumbent.
Yeah, no, that's one of the things that I feel like is always important whenever these discussions are being had. But I'm glad you mentioned kind of Bitcoin specifically. Let's shift to that too, because I feel like almost every time we have you on, we just talk so much about regulation and what's going on that front that we almost forget how attached you are to everything in the Bitcoin community. But I mean, in that sense, it is interesting right now because, you think about how the year's gone, and obviously the Bitcoin ETFs, I think, brought in a lot of new money into the space. And now, from what I'm hearing, it really does seem like it's time for everything else to be built on Bitcoin. And Michael Saylor, even himself, has kind of shifted into that camp where it's like, okay, now a lot of stuff can be built on top of Bitcoin. But what do you make of kind of where we're at with it around hovering at the 60K level? Kind of given everything we've seen play out, it seems like a lot of people are more confident in the back half of the year being really where things start to accelerate.
Well, yes. First of all, if past is prologue, that is when it starts to accelerate. I'm not surprised that it's been choppy, because if you look at the 210,000 block epics, which typically at 10 minutes average block size are around 4 years, we have the halvenings typically in the spring, and then it takes about 6 months for the halvening to be completely factored into the price, and the price starts taking off in October. What's actually happening under the hood? You see a lot of miner capitulation. You see a lot of miners that were not profitable. And keep in mind, look what happened to the network hash rate. It spiked right going into and after the halvening, right? So it became less and less profitable. So you've actually got unprofitable miners. We've seen some consolidation in the mining space. And that miner capitulation, it doesn't get talked about much because it gets overruled, to your point, by all these other sort of, more visible things. But there is definitely, we haven't seen it in the hash rate much, but we've seen it in terms of some of the smaller miners and some of the consolidation that has happened in the mining space. And I think that's going to continue. But around about October is when we historically hit that the low on miner capitulation. The miners that could hang on, just keep hanging on. And then they just shut off their machines because they couldn't make it anymore. And then just you get the rip roaring bull market. Now, I agree with those who are saying that each epoch in Bitcoin, the trough to peak price is not as high, because we start to see more stabilization, we start to see more maturity, and I think that that's true here. I know there's a lot of discussion about whether there's price suppression going on with the Bitcoin ETFs, not with the actual underlying asset, with the Bitcoin ETF price itself. Yes, there's a lot of leverage, and I'm sure that the Wall Street firms have done what they typically do. They rehypothecate, they lend, they collateral, commingle. But this is one of the things the SEC did correct. They did not allow the ETF holders to rehypothecate the underlying Bitcoin. Thank God, because there might have been a supernova at some point on those ETFs if the SEC had allowed any rehypothecation whatsoever the underlying Bitcoin. That ETFs are required by their prospectus terms to hold dollar for dollar, one for one. That's not the right term, dollar for dollar, because it's one for one Bitcoin to back the ETFs.
Exactly.
So
held in
the
custody.
SEC did a large for us there.
Yeah,
Correct.
and I think
Correct.
that is interesting though, because
So, yeah.
we just saw options get potentially approved on the BlackRock ETF, and you and I talked about some of the market shenanigans that could happen. I mean, I don't know if that necessarily coming online triggers anything in your mind. Some people are saying it'll do more for volatility. Some people say it'll do less. I don't know if you have a thought there.
Well, this gets into some of the theory of whether derivatives drive the underlying spot price, because an ETF is a derivative, and then an option on an ETF is a derivative on a derivative. And so there's a lot of leverage on the derivative, specifically the ETF, clearly, right? And there's even more coming now with options. And so the question is, which came first? The chicken or the egg? What drives the spot price? Is it spot price dynamics, or is it the derivative price dynamics, namely the ETF itself? Now, right now, I don't think the ETF is big enough to drive the underlying spot price, but you start at 100 to 1 leverage in the ETF, and then the dynamic, there is some feedback. I did a tweet thread that's been going around as there was all this discussion about shortening the delivery times. There was an amendment to the BlackRock ETF that Coinbase has 12-hour turnaround times, and it got so loud that Brian Armstrong himself came out and started talking about it. So what's happening is that now Coinbase is being forced by Wall Street dynamics into a different dynamic than the underlying spot market had developed for Coinbase. They're now having to do faster turnaround times, which means a lot more activity is happening off chain than was happening on chain, and that's not good, because that just creates problems, right? This gets back to the whole discussion of intermediaries should be proving their reserves to prove that they are one for one backed. So we just have to watch the whole thing. This is why I've said all along, the ETFs are a double-edged sword. Wall Street coming is a double-edged sword. It's all because the leverage, the typical fiat leverage games that Wall Street plays, that it's so good at, that it privatizes profits and socializes losses with, those are going to get applied to the Bitcoin market. Thank goodness, though, the SEC is not allowing them to be applied at the spot market level, with the ETFs now being required to be 1-for-1. That was smart of the SEC. One of the few things Gensler did do right.
Yeah, agreed. We're on the same page on that one. When we all watched that play out, it was like, okay, at least they got that part and they understand how this all worked, because it would be pretty terrible, I think, if they hadn't done that. As we saw sometimes with FTX,
Correct.
these things can turn rather quickly. In fact, I was just at the hearing, the sentencing for Caroline Ellison yesterday, so it all comes full circle.
Oh, wow.
But Caroline, when we think about, I guess, you're looking ahead, your projections, what are the takeaways, just to wrap up here, given everything you've heard yesterday from the SEC hearing, given that we're about to go into an election year, given that maybe all this stuff matters less when you think about the actual hardcore components of what make Bitcoin, what's the takeaway for anyone listening out there, kind of digesting everything that's happened in 2024 to wrap up the year?
Minor capitulation. I think you're going to see a rip-roaring bull market right around the time of the presidential election. I think that was one part of Satoshi's genius. It was not an accident that the Bitcoin white paper came out around the 2008 presidential election, right, as the 2008 financial crisis was happening. It was Halloween, October 31, 2008, and that coincides with a U.S. presidential cycle. So we tend to get rip-roaring bull markets right around at that time. That's probably going to pressure Harris even more, which is a good thing for all of us, because if she does commit to pulling all these Warrenites out, that's good for us, even if it turns out not to be as good as what Trump would have done. We'll just have to see. And I think, Bitcoin doesn't care about any U.S. presidential election. It's just system itself just keeps on trucking. Those of us who are long-term hodlers and who are truly committed to decentralization, all this stuff is a blip. Those who are traders really care about it. But like I said, there's such a dichotomy in the Trump transition team, with Tulsi Gabbard being very committed to decentralization, Howard Lutnick being a Wall Street CEO. Let's see how this all plays out. I don't think anybody can predict, but the long and short is, as long as Bitcoin keeps adding blocks, TikTok next block network is fine. It's a hell of a lot more stable than the U.S. political system. Let's put it that way.
Yeah, and certainly still, I think, a hedge for a lot of people. One last question before we let you go, Caitlin, too. I mean, obviously, you and I have been talking about this stuff for a really long time. It seems like every day in crypto is a year, so we've been doing this for I don't know how long now, but you've been doing it longer than I have. But I mean, when you think about kind of how much we've put into this and how much you've put into Custodia and everything else personally, I mean, what's kind of, I guess, your takeaways in doing this and trying to build it out, despite everything that we've seen? You too are still trucking along here in the battle to really lean into decentralization. I mean, you came from Wall Street. I came from traditional media. We're trying to build out this Colorado registered co-op here in the U.S., building a DAO. It ain't easy. It's always a struggle, but I've seen you stick to it too. So, I mean, for you still being here, I mean, how are you holding up? How are you feeling about everything and still fighting the good fight?
Well, look, I don't think any of us realized how much power Warren had until looking back at it. And so when you think about surviving the last 4 years, man, if we had all known that Elizabeth Warren was going to control crypto policy going into the Biden administration, first question is, would anybody... I think it's 62% of crypto owners in the United States voted for Biden. What would that have looked like had they known, had the press done its job? Frankly, had alternative media like you been there to expose that there had been a deal between Warren and Biden? I think a lot of those folks would not have voted for Biden, and it was a close election. So now, the emperor has no clothes. We know what's going on. There's definitely a question with Harris. But, long story short, we're almost done with that Biden term. And those of us who survived it, as Custodia is a survivor, we are wounded. No question, we are wounded. We have been targeted by powerful federal agencies acting outside of the law. And yet we do have a path to redress for that. And we're sticking to it. And I'm seeing that through to whatever the final conclusion is. We haven't talked about it, but last week, Custodia filed its last filing in our appeal at the 10th Circuit. And there will be, both sides asked for oral argument. Presumably the court will schedule that relatively soon, possibly before year end. And then we'll have a decision. And so obviously Custodia is watching very closely what happens with the election and of course what happens with the lawsuit, and we'll make decisions as we go. But we didn't talk about the Silvergate revelation, bombshell revelation that came out last week, that Silvergate had survived the bank run. None of us actually knew that. And it was murdered, suicided, so to speak, by the Fed. And we've known, because Barney Frank said it at the time, that Signature was suicided by the Fed. And so I put out a tweet that had red X's, a squiggly, and a green check mark for who's gone among the crypto banks, who's still around in their non-bank subsidiaries, and then who's survived as a bank. And of the 5 crypto banks that were pursuing charters / acting as crypto banks / applying for Fed master accounts, of the 5 of us that got targeted by Operation Choke Point, only one survived as an operating bank, and that's Custodia. Everybody else is either gone or retrenched. And man, again, you look at the grade that the Warren crowd would give themselves because they want a central bank digital currency. They're all patting themselves on the back over that. But let's see if justice prevails.
That's powerful stuff. And again, congrats to you still being on that list and still in the fight. As always, Caitlin Long, I thank you for coming on Coinage, and thank you for sharing your thoughts with us. I'll say it again. Keep up the good fight. The good people need some shine on them, and certainly always love having you on. Caitlin Long, thanks again for the time.
Thanks, Zach. Great to see you, as always.
All right, we'll chat again soon. That'll do it for everybody here at Coinage. For myself, for Caitlin, you can go ahead and join our project at Coinage.media and keep up with the biggest headlines in crypto, as we always do, wraparound coverage. You can go catch our latest interview and coverage of the Caroline Ellison sentencing as well. For everybody here, thank you again for tuning in. We'll see you again soon.